The truth about debt. Why debt is still misunderstood. Let's talk about debt, because despite how common it is, it remains one of the most misunderstood things in business. In the UK, debt carries a very specific emotional weight. It isn't neutral, it's rarely discussed calmly, and for most people, the word itself triggers fear. It feels like failure, like a loss of control, like something you should only touch when things have already gone wrong. For business owners, that fear is often amplified. Debt feels like admitting weakness, it feels like you've mismanaged something, it feels like a last resort. And you can see why that fear has only grown. Over the last few years, debt has dominated the headlines. Interest rates rising at speed, mortgage repayments doubling for some households, businesses seeing borrowing costs change almost overnight. Warnings from banks, caution from lenders, noise everywhere. What gets lost in all of that noise is crucial distinction. Debt itself isn't dangerous. Poor understanding of debt is. What I see repeatedly is not businesses failing because they borrowed money, it's businesses failing because they didn't understand when to borrow, why to borrow, and how to structure it properly. Debt doesn't create problems on its own, decision making does. Why we fear debt, UK cultural context. To understand why debt causes so much anxiety, you have to look at the culture. In the UK, we are taught very early that debt is something to avoid. We're told to save first, spend later. Borrowing is often framed as irresponsible unless it's for a house, and even then, it's treated cautiously. That mindset often works in personal finance. It often fails though in business. Businesses operate on timing, not morality. Opportunities rarely wait for cash to be neatly stacked up in an account. Growth usually demands action before certainty. Yet, many business owners carry personal finance beliefs straight into commercial decisions. That's where friction begins. They avoid borrowing even when it makes sense. They delay decisions even when data is clear. They prioritize being debt-free over being prepared. This is not discipline, it's misunderstanding. A deeper history of debt. Debt didn't emerge because people were reckless, it emerged because humans needed a way to bridge time. Ancient farmers in Mesopotamia often borrowed seed against future harvests. Traders during the Industrial Revolution borrowed capital to move goods across long distances. Builders borrowed resources to construct infrastructure that would generate value long after completion. Debt exists to solve one core problem. Value is often created before cash is realized. Governments understood this centuries ago. Roads, ports, railways, hospitals. None of these were built by waiting until surplus cash had appeared. They were built using leverage structured over time. Fast forward to today, and nothing has fundamentally changed. The UK government carries national debt measured into the trillions. That doesn't mean that the country is failing, it means that the country is investing across generations. Debt has always been about structure, intention, and timing, not desperation. Debt in the modern UK economy. Let's talk about how debt functions today. Banks do not lend money sitting idle in vaults. They lend based on confidence, structure, and repayment models. The financial system is built on calculated risk and leverage. The property markets are entirely dependent on mortgages. Very few people buy a house outright. Businesses do the same with commercial property, with vehicle, machineries, and technology. Even highly profitable businesses borrow. But why? Because cash flow timing matters more than absolute profit. You can be profitable and still run out of cash. You can be growing and still be constrained. What's changed recently is the speed at which conditions have shifted. Interest rates rose quickly, costs increased faster than many businesses could reprice, uncertainty has crept in. Caution makes sense, freezing does not. Avoiding debt altogether is still a decision, and in many cases, it quietly erodes opportunity. All debt is not the same. This is the most educational point I can put across to you. Not all debt serves the same purpose. Borrowing to cover losses is fundamentally different from borrowing to, for example, acquire revenue generating assets, smooth cash flow timing, fund expansion into proven demand, invest in systems or infrastructure. One is reactive, the other is strategic. When businesses collapse under debt, it is rarely because they borrowed early and intentionally. It's often because they borrowed late, emotionally, and without structure. Debt taken at the wrong moment magnifies the problem. Debt taken at the right moment creates flexibility. How businesses lose control quickly. Delay is rarely dramatic, it's subtle. At ATZ, we see businesses that look fine from the outside, turnover is solid, customers are there, staff are busy. But underneath all of that, invoices stretch from 30 to 60 days, suppliers tighten their terms, overheads quietly raise up, and cash buffers start to disappear. Instead of addressing the system, the founders absorb the pressure. They do more themselves, they delay hiring, they stop investing, they convince themselves it will all be stable. By the time they ask for help, the issue is no longer optimization, it's now survival. This is not because debt was unavailable, it's because action was delayed. Two real patterns. same markets. Now let's compare two common scenarios. Business A waits, they push through, they stretch themselves, eventually they borrow to plug a hole. The cost is high, the stress is high, the options are limited. Business B, on the other hand, acts early, they identify the pressure, they restructure cash flow, they use finance to buy time and clarity, they stay in control. Same market, same interest rates, same economy. Completely different outcomes. The difference is not appetite for risk, it's understanding the risk. Debt and emotion. Debt triggers memory. People remember recessions, they remember stories of collapse, they remember being told, never borrow. Good leadership is not about ignoring emotions, it's about slowing decisions down enough to think clearly. Many businesses that claim they hate debt are already paying for it in other ways. For example, there's lost opportunities, delayed growth, burnout, inefficiency, and stagnation. These costs don't appear on the balance sheet, but they are real costs. Successful businesses don't avoid debt, they avoid undisciplined debt. They understand purpose, structure, repayment, and exit, which is what we always talk about at ATZ Finance. They don't borrow blindly, they borrow intentionally. They ask better questions earlier. That is what discipline actually looks like. Closing. Debt is a tool. Used correctly, it builds resilience, flexibility, and growth. Used poorly, it magnifies problems. The businesses that succeed long term don't fear finance, they understand it. They plan early, they structure properly. Finance should support clarity, not chaos. Debt does not define success, debt does not define failure. Decision making does. The strongest businesses are not the fastest, they are the clearest. They prepare early, they act deliberately, they treat prevention as leadership. Debt isn't the enemy, delay is, and prevention in finance, in leadership, and in strategy is always cheaper than cure. Thank you for listening to this breakdown about debt. It's Mo from ATZ Finance. Please don't forget to like, subscribe to the channel, and look out for more content.